Welcome to another QuickBooks Desktop video. Today's video is reserved specifically for QB Desktop newbies. I laid out today's agenda for you. The video will involve providing step-by-step instructions for the 15 items listed. By the end of this video, you should have acquired enough knowledge to use the most common features of the software. Take note that there are multiple versions of QuickBooks Desktop. All versions have the same or similar interface. The features covered in this video are present in all versions of the software, including QuickBooks Pro. Note that QuickBooks Pro does not include sales orders and more advanced features relating to inventory. Inventory will not be discussed in this video. However, if you wish to further explore inventory basics in QuickBooks Desktop, please see my video in the link below. Alright, so this is our starting point. The very first thing we're going to do is click Create a New Company. We can go ahead and click Express Start. We'll write our company name. We'll call it Sample Co. Industry. If we click the Help Me, we can navigate through the different types of industry. For the purpose of doing this video, let's pretend we're opening up a barber shop. And what that does is it will automate, it will actually create what you can see on the side, GLs, that will probably be specific to that business, which is nice. And then we can fix it later on, so we'll look at that. So we'll click barbershop. That's what our company is going to be. We'll see it's a corporation. CRA, if you're in Canada, you have a CRA business number. And you have the, if you're set up for sales taxes, you might have a provincial sales tax number. But we can just skip that part. Doesn't matter. We'll pretend that we're in Ontario. And we'll click Create Company File. Might take a few seconds. Okay, so for the purpose of moving things along, I went ahead and stopped the video and restarted recording now to show you how the chart of accounts work, which is the next step. So when you get into QuickBooks, actually, it's going to ask you if you want to set up a couple of things, one of them being your bank account, so that you can automatically get bank transactions into QuickBooks. I clicked no because I'll have a separate video showing how that works. So for now, we're just going to look at the chart of accounts, which we can access in a very quick way by using keyboard shortcut Control-A from the home screen. So that's what we have. We have our chart of accounts. When we open our chart of accounts, normally, actually, you won't have these numbers. So some people are comfortable using GL numbers. Other people are not comfortable or they don't like it. So the way you can turn those off and on is by going to Edit from the top toolbar, then clicking Preferences, then clicking under Accounting here, Accounting, Company Preferences, by unticking or ticking, if we want them, the Use Account Numbers. So we're going to go ahead and untick that, and voila. Now, if we had them ticked and we like using them, we can also change the numbers. And the numbers follow a logical sequence. Any type of asset will automatically start with a 1. Liabilities will start with a 2. Equity will start with a 3. Income will start with a 4. Cost of goods sold with a 5. And all other expenses with a 6, which is very common with most accounting systems. And then we have this Ask My Accountant GL, which I personally like to use. And if we wanted to, we can change the account number. So we right click, Edit Account. And instead of calling it 800, we can call it, you know what I mean? 9 5 times. But let's remove them. Okay. So if we wanted to create additional GLs, All we need to do is right click and then hit new. So next what we're going to see is different categories of accounts that we can tick and select from. So let's pretend we're going to create a bank. We can click continue. The name can be whatever name you want to call it. Like say it's Toronto Dominion TD. We'll call it TD Bank. Description is bank account, or whatever description you want to give it. Then we save and close. Since it's a bank account, it's going to ask us if we want to link it so that we get transactions automatically into our QuickBooks, but we're going to say no for now. And we could create other types of accounts, like say expenses. Let's do an expense, which is a 6,000. So we'll click expense, continue, and let's use like a general, less common expense account like cleaning / maintenance. If that's spelled wrong, we'll just call it cleaning expense. All right, and we didn't have the numbers activated, so we can forget about the numbers actually. So we don't need to worry about the numbers. Let's create something that is not one of the items here. So we have income, expense, fixed assets, bank, loan, credit card, equity. If whatever account we want to create does not fall into any one of these types of categories, we click here, other account, and then you select from the one that makes the most sense. So if it's a prepaid, let's say for instance, that would be an example of a current asset. So we could do this, and we could call it prepaid or prepaids. Save and close. So now we have prepaids. We actually had another prepaid gel. It was called prepaid insurance. So we have two prepaid accounts, which is fine, which you can have. And if you have similar accounts, you can create parent accounts. So let's call this account, what I like to do when I have sub accounts, let's call this account prepaid rent. Now I'm going to create another prepaid account. And call it prepaid. Okay. And the description, you don't have to put it, but you can. Now what I want to do is with my prepaid rent and my prepaid insurance, I want to make it a sub account of prepaid. So this is how I do it. I need to go into each one, right click, edit account. We can actually change things. Prepaid, that's my parent account. So watch what happens. You see how there's this little indentation? That means that prepaid insurance is a sub account of prepaid. And when we generate a balance sheet and we have amounts in those categories, the prepaid rent and the prepaid insurance is going to show up as a sub account of prepaid. And voila, that's our chart of accounts. The next thing we want to look at, and this was the third item on our agenda of 12 items, was how to create a customer. So what we're going to want to do now is we can get out of this chart of accounts if we want to, which we can do by simply hitting escape from our keyboard, and that brings us to the home page. So in order to set up our customers, we need to go to what's called or known as the customer center. And we can get there in a variety of ways. In QuickBooks, there will always be multiple ways that we can get to wherever it is that we want to get. So from the home page, we could simply click where it says customers right here. That brings us to customers. Escape. Let me show you another way. On the right, we have customers here. That brings us to customers. Up here, we have customers up here. It says Customer Center. That brings us to customers. And you notice in this top, I'll call it a toolbar, in this top toolbar, where it says Customer Center, it tells you the keyboard shortcut. So watch this, Control J as the keyboard shortcut. So if from the home page we hit Control J, that'll automatically bring us to the customer center. So if we click up here where it says New Customer and Job, we can select New Customer. Or if we right click on this section, we can create a new customer by right clicking here as well. So let's right click and we'll call the customer ABC Corp. We'll just give it any kind of name. Put the company name here. I like only leaving it up here and down here, because if I put the company name here, what happens is when we write checks, it'll show up twice. So I only put it in those two sections. We can write information like the phone, the email, anything that relates to the customer. If there's a ship to, we can have a ship to. So we might be billing this company, right, at this location, but we could copy that info and we can edit it, but it might go to another ship to address. So by default, whenever we invoice, the information that we have in here will automatically show up. But we can always change that. Payment settings, this is good to set up from the get-go. So if we have, or if that customer has terms with us, say net 30, so he's allowed to pay his invoices in 30 days, we'll select net 30. And what will happen is when his invoice is past due, there's a method for us to see that it's past due because it's older than the net 30, the 30 days. So just going to show you the simple way you would set up a customer. And the fourth item on our list is setting up a vendor. So much like the customer list, customer center, we have a vendor center, which we can click from the home page. We can click from up here, and we can click from over here on the side. So let's go to our vendor center. Same idea. We can click up here, new vendor, or we can go in here, right click, new vendor, and call it XYZ Inc. One more mention about the suppliers is if we double click here, if we're going to decide to use checks, to buy checks, put them in our printer and print from QuickBooks our checks, we're going to want to make sure that this information here is completed with the vendor's address. And the reason is because we can buy window envelopes, and then this section of the check will have his address, and we won't have to worry about putting a sticker or writing the address, because the transparent part of the window envelope will show all of that information, saving us some time. Now, our fifth step is creating and sending an invoice to a client. So before jumping to that, we have a little bit of work to do, and the little bit of work to do is creating our items. So this is our item list, and let me show you how you get there. You click lists, and then you click item list. And once you're in there, you can right click new, much like the chart of accounts. Right click new to get a new GL. Here we right click new to get a new item. And we have a variety of items we can choose. In this case, we don't have inventory. So it's a service we're going to be providing. We're going to be providing, let's say one service can be a haircut. So that's the name we used. If we wanted, we could have used a code, 001 haircut, but let's just call it haircut. We're going to, keep it simple. And the description is haircut. Now, the name is when we create our invoice, we start typing. That's what comes out, haircut. The description, so this part won't be visible on our invoice. This part will. But essentially, I want to use the same item, same description. I want it to be the same. And the two important things are the rate. So I'm going to choose to say that $45 is how much a haircut charges. And we're going to link it to a income GL. This one is pretty appropriate, services income. So every time we create an invoice, the credit, the mechanics behind what's going on in QuickBooks is going to be debit AR, credit services income. I'm happy with that, save and close. Let's create another one. Right click new, service, name. This one we're going to call it, we're going to say we do beard trim, okay? We're going to say that's $30. Services income. So you get the picture. Now we're going to get out of the screen and we're going to create an invoice. So like we saw previously, there's multiple ways to get to where you want to get to. We can create an invoice by clicking create invoices from the home page. We can go up here under customers and click create invoices. We can also hit Control I. So that's easy to remember, invoice I, Control I. And I created some fictitious customers. Now, most likely it's not a corporation that we're going to be invoicing. It's probably like an individual, right? Someone's going to come in for a haircut. So I'm going to select James Smith. We already created him as a customer, but we don't necessarily need to go to our customer list, to our customer center to create a new customer. We can do it from here, right? So we click this little arrow and we can click add new. And we can write Jack, I don't know, Jack Rizzo, we'll call him. So Jack Rizzo is a customer. And if I fill out this section in here, I'll see his address information on the invoice. What might be useful if we want to email him the invoice, or if we have customers where we'll want to email them invoices, it's always good to fill out the main email section. And I'll show you why. The reason why is later on we can select this button right here and it'll send him the invoice. And we won't do it because we need to set up our email and we didn't finish our transaction yet. We didn't finish our invoice yet, I mean. So let's continue with our invoice. The date, well, the date is going to be today's date, so it's fine. But if we wanted to change it, we can click that little calendar. And there's also keyboard shortcuts. If we hit M while we're in the calendar, we can go backwards in intervals of 1 month. If we click H, we can go forward in intervals of 1 month. If we click Y, we can go back in intervals of years. So now we're in the year 2016. If I want to go back to today's date, I simply click T and I'm back in today's date. So that's a little keyboard shortcut that saves time. And now we want to charge him for a haircut. So haircut, you see, and that pops up automatically. One time, $45. We got our sales tax, H, which is for HST. So we set up this file as if it was a Ontario Canadian province. And we have the 13% that's being calculated on our pre-tax of 45. So now we're finished with our invoice. We can do a couple of things. We can save and close. If we click that, it'll save the invoice and it'll bring us back to whatever previous screen we were in. We could do save and new. If we do save and new, it'll save the invoice and it'll bring us to a new invoice. Or we can just click save and we'll stay in the same place. So we just saved it. But in reality, I wanted to do save and new because I wanted to create another one. So now I'm going to invoice James Smith. And we're going to invoice him. So same concept, right? Dates, pick the date, the invoice. And we'll say he came in for a beard trim. So that's $30. So now I want to save and close. I want to get out. And now if we go to our customer center, we see these amounts under Jack Rizzo, under James Smith. So I'm going back. If from the customer center we want to see that invoice, we can double click. I'm back on James Smith's invoice. And we could have emailed this. We could have saved this. We could have saved a PDF of this file into somewhere in our PC. So if we wanted to do that, we go up here under save and hit save as PDF. But I'm not going to save that. I'm just going to show you how it works. And we can also email it directly from where we are. So if you click this little email invoice, it won't work because we didn't set up our email. So it'll ask you, right? If I wanted to, first of all, I'd have to say what my email is because it comes from a sent email and what his email is. I'll just skip this part, but that's basically how it works. You would just have to fill out that information. And now we're going to move on to another topic. The next topic, or rather the next step, is going to be entering a bill from a vendor. And we can do so by getting into our vendor center, by clicking, like we saw before, vendors, or we can simply click enter bills from the home page. So let's just click enter bills from the home page, and we see this sort of thing. Same premise like the invoice. This time we have a vendor. We select our vendor's name, supplier number 1, we call them, the date. Well, we received the bill today, but it might have an April 1st date. So I'll put April 1st. That bill that we received from our vendor might have, or should have, an invoice number. So we'll give it 123. The amount, let's pretend it's $113. When are we supposed to pay the bill by? Well, that's the date over here. And in the memo section, we can write anything we want. This part doesn't really matter. It's just a personal note that we can leave for ourselves. And then further down here, we have 2 tabs. Okay. For the purpose of making this video simple and easy and not going into too much detail, I decided not to set up a company that is product-based, that has inventory. And that's just because I want to keep this video as simple as possible. Now, if it did have inventory and if the company was selling products, I would definitely invite you to look at the video with basic setting up of an inventory company. And if your company was selling inventory, you'd have to select the items tab. And if it was buying stock, you'd have to select the items tab because that would affect your inventory. But to keep this simple, this is a service-based company, and we're going to be clicking the expenses tab. Okay, so now we want to make sure we select the right expenses. So let's pretend that we purchased some shampoo, for instance. Okay, we will have to select the most appropriate GL in here. So salon supplies, whichever GL we think is most appropriate. Of course, we could create our own GL. We could create a GL called shampoo expense if we really wanted to, right? And let's just do that. And you see, And now if there was sales tax, we can select the sales tax. And our 113 amount up here is supposed to balance with our pre-tax and our tax amount, and it does. And I'm going to click save. So I just saved the bill that I entered. Now, one thing that's really neat is we have this paper clip up here. And what I like about this paper clip is if you're a person who doesn't necessarily like paper, let's say, and likes keeping all of the files electronically scanned, you can scan a bill from a vendor and then upload it in here. So what that allows you to do is, if at any later point in time you want to see that vendor bill, you could come and hit this paper clip up here and you could open up that vendor bill. So let me show you how that works exactly. Let me pretend that this is a bill that I received from my vendor, right? So my vendor was called Supplier 2. Let's just pretend this was the bill we had, the physical bill. If we would have scanned this bill and saved it, I'll just save it on my desktop here. When I'm doing the data entry in QuickBooks, I can click the paperclip, computer, and find my vendor bill, which is over here, and upload it, right? So now I'm done. I save. And now let me get out of here. So if at a later point in time, I need to check out that bill, I could come in here, click my paperclip, and voila. So that's very convenient. Now in this portion of the video, I want to show you how a sales order works. I won't be doing that because I realized one thing. At home I have a QuickBooks Pro version of QuickBooks Desktop, which is almost exactly the same as Premier and the other versions, minus some modules or some features or some more advanced applications. QuickBooks Pro doesn't have sales orders, but I'm happy that it doesn't, because I'll show you a QuickBooks hack, basically how to have something that'll work in the same way. If you're on a QuickBooks Premier or QuickBooks Enterprise version of QuickBooks, the interface is going to look exactly the same. What you see on my screen right now is going to be exactly the same. So if you wanted to activate your sales orders, you could do so by going under Edit, Preferences, and there's a section called Sales and Customers. And under Company Preferences here, you don't see it because I'm in the QuickBooks Pro version. And more recently, they don't have sales orders. But there will be a section here where you can click Enable Sales Orders. So I'm on Pro. I don't have that. What we do have in Pro is estimates. So again, without going into too much details, there are very often in accounting or in business several steps before or leading to an invoice. Typically what might happen is a client might send a PO. Your client might send you a PO, a purchase order, basically a document detailing what kind of goods or services he or she or that business requires. And then from that, you can actually create a sales order and then convert that to an invoice. Sometimes those steps are skipped, but that's very often the process. But the point of showing you the sales order was to show you that in some cases there's progress billing. between your business and a client. What does that mean? That means that there's some kind of product or service that you're selling the client, but you're billing your client in increments. So for instance, there's a job, and that job costs $1,000, let's say, or it requires $1,000 worth of goods, or it requires 10 hours, or it requires whatever number of hours or dollar amount or whatever. But you invoice or you perform the job in multiple steps. So for instance, you're first going to bill the client for 3 hours of work, for whatever hours of work, and you want to keep track of that. That's where the sales order comes in useful. And it also comes in useful because sometimes it's just like a requirement, basically. But estimates work in the exact same way if you set them up in that particular way. So what I basically want to show you now is, first of all, how to create an estimate, number one, and then number two, how to bill from that estimate. Okay, so let's jump right into creating an estimate. And this won't be very real life realistic. I'll create an estimate that will be very realistic and that will make a little bit more sense. Now I just want to show you how the actual estimate works and how you can convert that into an invoice. So let's pretend we're creating an estimate for a barbershop for James Smith. Again, we select the date. So we can pick today's date if we wanted to, the estimate number, and then it works in the exact same way as an invoice. Now I say that this doesn't make, it's not very realistic, because if you're a barbershop, when would you ever have to create an estimate, right? Why would, before you create an invoice, make an estimate? But this is just for the purpose of showing you how it works. And then we'll get into something a little bit more realistic. So once we did our estimate, which works exactly the same way as an invoice, there's this button right here at the top called Create Invoice. All we need to do is click that, right? And it converted our estimate into an invoice. And then all we need to do is save. And that's how the estimate works. Now, one thing I want to mention is that an estimate, whenever you create one and you finalize one, it's a non-posting entry. What does that mean? That means it doesn't affect your books in any way. Once you've finished your estimates, you haven't generated any type of sale. Whereas the mechanics behind you creating an invoice is debiting your AR and crediting your sales GL. Nothing is happening when you're creating an estimate. It's there and it hasn't been allocated to any of the GLs. So another feature that I haven't shown you until now, which is super useful to use, is hitting Control F from the home screen. What's the purpose of that? That's to use the find tool. The find tool is very useful whenever you're looking for things just in general. So for instance, now we just finished doing an estimate. If I go in my find under the simple tab and I select estimate from this drop down box, I can see my estimate, right? Actually, I could see any estimate that would have been generated. And I could have filtered by date in here. I could have seen estimates that were created between, April 1st and April 4th. So basically none of them. So you wouldn't see any. Or I can just remove any of the information in these fields. If that's at all possible now, let me get out and get back in. I could leave those blank and it will just give you search results for all estimates. Now I only created one, so you only see one, but we did create multiple invoices. So if I click find, I see all of my invoices. Let's get to what I called QuickBooks hack. So let's get to this QuickBooks hack. which isn't really a hack at all, but is a useful option. I'm gonna go back to my estimate. So Control F, estimate, find, double click. I want to turn this thing into an invoice. Not an invoice, but a sales order. I want it to be called a sales order. So if I was to save this document right now, I want to show you a preview of what it would look like. It would look like this. It would say estimate. That's not what I want. I mean, that could be what I want, but if I'm picky and I want it to be called something else, like sales order, and have it work like a sales order, I can go over here under formatting, hit customize data layout, customize data layout, and change this field. Okay. So if you look at all of the boxes, we have also these little tickers here. So what this does is, if we click where it says screen, well, the title is going to show on the screen, but when you print it, it won't show, right? If I unclick the screen, it won't show at all. So you see what happened? The word estimate was up here. Now it's not there anymore. So let me go back to my customize data layout. If I click both now, see how that estimate name pops up? But what I want to do is just call this sales order. I want to change the name. And there you go. Now it's called sales order. And now we have a sales order. So even though you go back in here in your find, right? One thing to keep in mind is that if you go back in your find, you're still going to have to search for estimates, right? But it's going to be titled sales order. So that's just one thing to keep in mind. So if I save this thing, now I'm going to call it sales order modified. And I save this to my desktop and I open it up. See that? It says sales order now, which is what I wanted. And I'm happy with that. So if I come over here and I grab an invoice, and let's pretend you bill clients in Spanish, in whatever, French, any language. So the word invoice in French is facture. So if I wanted to make my invoices bilingual, let's say, I can do that. So I can go on an invoice, go under formatting, customize data layout, make a copy, sure. And I could call this invoice / facture, or factura if it was Spanish, right? And I want to see it on the screen. You see how that changes? Which is nice. So now you can generate bilingual invoices if you want to. Just to mention that you have your default invoice style, and then this is a customized style. So that's pretty good, because maybe you don't want to have it bilingual. Maybe you want it to show in English. You see, you could even turn it into a packing slip. But just keep in mind that we went into the invoice section. If we go into the invoice module, these will all be posting entries, okay? So just because it says packing slip doesn't change the fact that this will still be a posting entry, okay? All we're doing is we're just changing the title, right? Whereas with estimates, when we go to estimates, whenever we go in here, right? Whenever we create something from in here and click estimates, this is non-posting. There will be no entries that will be affected. There will be no accounts that are affected by whatever data entry we do in the estimates, which we've changed the title. It's a title change. We've changed it to sales orders. But in this module, there's no posting entry. So going back to that invoice I was on, or any other one, we now have this bilingual invoice, but we can have multiple. We can just call this, let's pretend it's Spanish, factura, right? So we can have a copy that's in Spanish. We can have a copy that's in English. This is the part where I want to show you how the progress billing works, how you can keep track of that. So because I'm indifferent, I don't care about titles and if it's called sales orders or estimates. I went back and reverted what I did, and I'm calling my estimates. Okay. Now, in order for the progress billing to work, we need to activate it or get it set up. So under edit, in the top, what I'm calling a toolbar up here, edit, then preferences, go to job and estimates, go to company preferences, and make sure that it says, do you want to create estimates? Yes. And do you do progress billing? Make sure that says yes. And for the purpose of having something that's logical, let's pretend that this barber shop not only does haircuts and beard trims, but it also provides training to students. So it's also a barber shop school. Okay. So since it's a barber shop school, let's pretend that it provides training. So I created this new item called Consulting Barber School in here. I like the name training better. And for example, we're going to assume that in order to have a student properly trained to become a barber, they need 100 hours. In reality, it's a lot more than that, but we'll pretend it's 100 hours. So on our estimate, we'll have a $100 estimate. But in here, we'll say that our hourly rate is 20 bucks. So hopefully this will be all clear in a second. So I'm going on estimates. Her name is Jane Doe. She's our new student who came to our barber school, and she wants to learn how to become a barber. So we're going to get her set up. So my quantity is 100 because in order for her to go through the training, it's 100 hours. So like I said earlier, this is a non-posting entry. I have my estimate set up. And the point of this is for me to track. It's going to be for me to track how much I invoiced her. So on her first day, we'll pretend when she comes to our school, we train her for 5 hours. So we're going to invoice. I hit invoice and I get this pop-up. It says, do you want to create an invoice for the entire estimate, 100%? Do you want to create the invoice for a percentage of the estimate? Okay, so you can actually create a percentage. So if we click 25%, 25% of 2,000 is 500 bucks, right? But we don't want to do that. Create invoice for selected items or different items. This is the option we want because in reality, I just want to invoice for 5 hours worth. So our quantity is basically hours in this case. And unfortunately, or rather fortunately, we do have an option. So if we don't tick this thing, we can only pick an amount, right? So 5 times 20 would have been 100, but instead of calculating it in our head, we can pick 5 hours over here, and that gives us the 100. And then boom, that just converted it to an invoice. And now we can save. Back to our estimate that we just created. I just want to mention we can see a couple of things if we're back in our estimate. So if we click reports over here and we click transaction history, which is an option we could use for invoices, for bills, for a lot of things, but let's see how it works for estimate. We can see a history of what was done or linked to this estimate. So in the case of this estimate, there's this invoice. We can see that we generated invoice number 9 and we invoiced $100 off of this $2,000 estimate. So these amounts that you see are actually after tax. But that's exactly what it was, 100. We can also generate a report. So if we go up here under reports, we go under jobs, and we hit job estimate versus actuals summary, we get a report like this. For right now, and not to overcomplicate things too much, we don't need to look at costs. So if we hit up here under customize report, and we remove anything that relates to cost, and we just leave the revenue because we're dealing with invoices. So only revenue is affected. What we see here is the estimated revenue. This lady who comes to our barbershop or hair salon for training for our barbershop or hair salon school, we're going to generate over time $2,000 of revenue. We've only generated or actually billed up until now $100 worth. So if you ever have a negative difference like this is what's left on your estimate. So that's nice because it allows you to keep track, right? So you know that this is still open. You still got to bill more over time to Jane Doe. So let's go back to that Jane Doe estimate. Let's pretend now that we invoice her for, I don't know, we invoiced her for 5, let's invoice her for 15. It does the calculation, 300. Save and close. I'll go back to my estimate. Oops. So if I want to find my estimate, because I closed too many screens, I could go into find, I can look under estimate, and I find Jane Doe here. Another way is I can go to my customer center. I click Jane Doe, and I go under estimates. This might say invoices, it might say something else, but I'm under estimates, and I find her here. So I'm back where I was previously, and again, I'm going to show you that transaction history. We have the first invoice, number 9. We have the second invoice, number 11. And let's just say now I want to invoice her for the balance, okay? There's 80 hours left, by the way, so I highly doubt that we're going to do 80 hours of consecutive training, but maybe we forgot to invoice and we just need to invoice her for the rest of the time that we spent training her. We can hit create invoice for remaining amounts on estimate. It tells you how much dollars you invoiced previously, and now you're going to invoice 1,006. So the 400 plus 1,006 equates to 2,000. Save and close. Now we're going to see what kind of impact that has on our report. So we're going to go to the place we went previously under jobs time and under job estimates versus actual summary. We're just going to customize to remove the cost. And what we see now is that there's no difference. And the full estimate revenue became our actual revenue. Now we're going to go into our step 8, which is creating purchase orders and matching them, or rather creating vendor bills and matching them to purchase orders. So I already have my purchase order set up because I see it on my homepage, but if you don't, you can click Edit, Preferences, Items and Inventory, Company Preferences, and make sure that Inventory and Purchase Orders are active as ticked. So I click Purchase Orders, I select the supplier that I'm ordering stock from, and I fill out these fields. And let's pretend that for our hair salon or our barber shop, we're going to order, like, say, hairspray. Okay, so we need to create an item. We don't have inventory properly set up, and we're not going to touch inventory in this video. So we'll select non-inventory part. Okay, normally you would have selected an inventory part, but in this case we won't. It's just for the purpose of showing how this works. So we can give it a name. It's called hairspray. On your purchase order that you're going to send to your vendor, the business might want to see their SKU number. So if they have a SKU number and they want to see it, it's always good to put it here. So let's pretend the hairspray SKU number for supplier number 1, they want to see B, 076, we'll say. So you would put that there. Price, we'll say it's $1 each. And then you always have to link it to some kind of account. So we'll say this goes under salon supplies. And I already created hairspray. Gosh. So let's call it, we'll call it combs. We'll call it combs. We're going to order combs. And we'll say that we ordered 20 combs. We'll save and close. And we have our first purchase order done from supplier 1. Now, what we're going to do is, just like we did previously in step number 6, which is entering a bill, we're going to follow those same steps, but something different is going to happen this time because we're going to want to match it to our open purchase order. So let's assume that we jump forward in time and we got billed finally from that same supplier 1, for the combs. So we're going to do enter bills. We select supplier 1, and look, automatically we get this pop-up here. It says, open POs exist, open purchase order exists. Do you want to receive against one or more of these purchase orders? And you say yes. And if you had multiple, you would select which purchase order you wanted to apply your bill against. Since we only have this one purchase order, we'll click that and OK. And we'll write our vendor's invoice or bill number. So let's say it's 8888. And then we can just hit save and close. And that's how we do a purchase order. And that's how we link it with a bill. We now have a lot of data in our little sample company file that we created. So at this point, I'd like to generate some reports to show you what a balance sheet and what an income statement looks like. And like a lot of the other functions or modules in QuickBooks, there's a variety of ways that we can access the reports. We can access reports usually by clicking reports. And then in the case of the financials, we go under company and financial, and we can hit profit and loss standard for the P&L. Or we can go down here and go to balance sheet standard. Or a trick that I like to use is the keyboard shortcut, which is Alt-RF-S for the P&L and Alt-RF-B for the balance sheet. And then we can tile these vertically by doing Alt-W-B so that we have them side by side. And then we just look at this fiscal year. So for the end of this month, let's say, and this fiscal year. So now we can look at the data that we have. And if we double click, for instance, on the P&L where we have our income, we double click on those amounts, well, then we get a breakdown of everything that makes up our services income, for instance. So for services income, we have 2,410. Well, we double click services income, we get a full breakdown of what that 2,410 is made up of. Same thing with any other GL. And one more thing, we can also generate a trial balance, and we can do that by hitting Alt R A B, and that's our trial balance. Or we can go up here and go to reports, and then go to accountant and taxes, and then go to trial balance. Now we're going to be looking at receiving payments from customers. So let's say we received a check for any one of those invoices that we created previously. Let's pretend Jack Rizzo. And like I said previously, this is a barber shop. Probably the customer would pay right away with credit card or cash. But let's assume, for the purpose of showing you how receiving money works, we receive the cash or the check or whatever it was now, and we want to record the payment. We can do it a number of ways, but I'll show you this way. We'll go on the customer name. We'll double click the invoice that he's paying and receive payment. And then we're going to write the amount he paid. In this case, it's the same as the amount that was invoiced. Date we received the payment. Let's pretend it happened, on the 20th. The payment method. Well, let's pretend he paid by check. We can write the check number. It was check number, let's just say hypothetically 85. And then we do save and close. And you notice that it says paid April 4th. April 20th, excuse me. Let's do another one. Let's do one where multiple invoices are paid. So let's say that we have invoice 4, 5, 6, 7, 8. Let's say this customer, James Smith, only pays invoices 5 and 6. So we'll go to those. Well, I'll show you a different way that he can receive the payment. You can do so by hitting receive payments. Instead of going on the customer, you can do this by going on the home screen. You click receive payments from the home screen, and now you select the customer, James Smith. And he's paying us invoice 5 and invoice 6. And we'll say the check number this time is, 900, okay? And we save and close. Now, we receive those checks, but we want to make the deposits. We want to bring those checks to the bank account. So they're probably going to come into a big lump. We're going to create a big lump sum deposit for those two checks together. So the way you would do this is you would click on, let me redo it just to show you. You would click on banking and then make deposits. This is for the purpose of allocating the money to our bank. So what we want to do is debit our bank account for the full amount of the $50.85 for the first check received, plus the $276.85. So when we go and do the deposit at the bank, we're going to see that $327.70 was deposited to our account on the 20th of April. So save and close. Let me show you in our GLs. If I go to my chart of accounts by doing Control A, I double click on TD. Look, I see the transaction. $327.70. So then it's going to be easy later on when I do my bank reconciliation to identify that $327.70 as one big sum. We'll do a bank reconciliation in a little bit. So now I want to show you how to pay a supplier. I'm going to go into my vendor center. I don't necessarily need to go into my vendor center, but this is one way of actually paying a supplier. And I'll show you a variety of ways. If I double click on any bill, so say for instance, I want to pay specifically this bill. When I'm on the bill, create bill screen, if I hit pay bill over here, it'll bring me to another screen. It'll automatically tick and check mark the bill I want to pay for the supplier. And let's assume I'm going to pay him by check. Let's do it by check. And I'm going to pay him by check on the 15th of April. And in this option, it asks us, do we want to print a check or do we want to assign a check number? Now you would hit print check if you've already purchased QuickBooks checks that can be printed from your printer. If you have a manual checkbook, you should select assign check number, right? So if you just got started up with your QuickBooks file, chances are you didn't order the checks yet. But if you did order checks, you can hit print. So let me do it if you don't have those ready. So you'll get your checkbook, right? What you're doing is you're getting your checkbook right now. You're looking what your next check number is, and you'll write down manually the 2260. And now QuickBooks is going to ask you, what check number did you use? Well, it was check number, let's say 26. Okay. And that's saved. Now you notice that I'm hitting transaction history. That'll bring me to any history relating to this bill. So with regards to this bill, we saw previously when we hit transaction history, when we were under the PO, that it showed us history relating to the bill. And now if I'm on the bill, it links it back to the PO and it also links it to the payment. So this is the payment we just did. I'm going to actually delete this payment. And you see what happens? It's open again. Now I'm going to repay it because I want to show you what happens if I select to be printed instead of assign check number. We get this little pop-up right here. And then you should select print checks, and you're going to tell it what your next check number is, and then it'll print it, and it'll print it to whatever printer you have. So I'll print it to this one, and you'll probably hear my printer going in the background. I didn't insert any checks into my printer, right? So it's going to print it on a blank piece of paper. Let's pretend that you really do have the checks ready, checks that are printable. You've purchased them. The advantage of having those is you'll be able to save lots of time. You'll be able to pay multiple suppliers in one shot. So it's going to be touch it once and get it done type of deal. So to illustrate how that works, I'm going to go ahead and select Pay Bills. And this time, I'm going to pretend that I'm going to clear out all of my payables in one shot. So I'm going to click this one, this one, this one, this one, this one. So you see this row where it says vendor, it says the supplier name. This is the supplier's invoice, and this is the amount. So I'm paying supplier 1, his first invoice, supplier 2, supplier 3. He has 3 invoices, I'm going to be paying all of those. So go ahead and select pay selected bills, and to be printed. It's important we select to be printed. And I didn't mention this previously, but if you had multiple bank accounts, here you select which bank account you would be paying those checks from. So in our case, we only created one bank account, but let's create another one. Let's call this Scotia Bank. So you see now we have two, but I want to affect my TD bank only. So I'll hit pay selected. And here it shows you all the suppliers that are getting paid. You hit print checks. And whatever your next check number is, you'll select that one. You'll make sure when you insert your checks inside of the feeder of the printer that they're inserted the right way, whether it's face up or face down or whatever, and you have the right sequence, the largest number at the top or at the bottom. And then you just click OK. You select your printer, and it'll pay all those checks. So right now, my printer, you're hearing it in the background, it's going to pay 4 checks. And of course, since I didn't insert any printable checks, I'm just printing on paper, and that's fine. But I want to delete that entry. So I'm going to go in my chart of accounts, hit my bank, and I'm going to delete. You shouldn't be doing this, but I just want to show you later on how a AP report works. So I'm actually removing these. In our 9th section or 9th step of the video, we looked at balance sheet and income statement reports. And by the way, those were a simplified, nice and clean, basic version. You can get so many different types of reports when you go under company and financial. So I took the most basic ones. You can go ahead and explore that further. Now I want to look at a basic aging report for both payables and for receivables. So we'll go under reports up here. We'll go under vendor payables, AP aging summary. This is the AP report that I find is nice and clean and simple and easy to look at. So that's our AP report. And we generated, I remember, a lot of bills on a later date. So that's why I generated it on a later date, April 30th. And obviously, we don't have any amounts too far into the aging. So the standard info we see is in intervals of 30 days. You can change that up here. I think you can do intervals of whatever you want. Let's try 45. So you see we have intervals of 45 days, but let's keep it standard, 30 days. We don't have too many items far into the aging because they were entered with a pretty recent date. And if we want, we could export this to Excel. Click Excel up here, create new worksheet, and that goes with any type of report. It can always be exported to Excel. So let's look at our AR report. If we go under reports, we go under customer and receivables. We have a similar report for AR. It's called AR aging summary. Hit that, and we get this nice little report. Same concept. Number 13 on our list is important for your accounting person, your bookkeeper, your accountant, for his month end is making journal entries for his or her month end. And we can create a journal entry by going under company and selecting make general journal entries. So typical kind of month end would be adjusting or making some kind of accrual. So let's pretend we're on April 30th and we're accruing interest for something. So I don't know if I have an I'll create a GL, and I can create one directly from here called accrued interest. Let's pretend we have $100. We could put a little description here, blah blah blah, interest on loan for month of April. And then we want some kind of liability. We'll create an accrued liability account. And we'll say that this is current. So we'll call this accrued liability. $100. And we'll copy paste this. So if we look at that GL, we can see this little blurb. Save and close. If I go and find that GL, so I did Control A, my chart of accounts, accrued liability, I double click here. Well, I can see that it increased by 1,000, and I see my little blurb. Another month-end item we're going to be looking at is bank reconciliation. We'll get right into it by going to banking at the top, reconcile, and when we go to bank reconciliation, we're going to want to click which bank we want to reconcile. So let's assume we opened up Scotiabank, and we'll reconcile this for April, because we'll pretend we started our company April 1st. Let's pretend there weren't any transactions. We didn't even get charged service fees. So there's absolutely nothing that happened in this bank. So 0, just to get to the next screen. And you'll be brought to a screen like this. And you'll tick any payments on the left side and any deposits on the right side. And then when it's over, you'll click Reconcile Now. This will take a little bit of time. And it'll ask you, do you want a summary report or a detailed report or both? Let's click both. And you can save this if you want. You can export it. You can print it. You can hit print and then save as report. Click escape, and now you're on the detailed version. It would be a little more useful for you if I showed you how to reconcile an account that did have transactions. So our TD account did have transactions. In our books, the balance is $305.10. To make things simple, let's assume that the bank statement also shows a $305.10 balance, right? So when we're going to reconcile this account, it's the same step. We hit banking, reconcile. We're reconciling for the month of April, and it's TD Bank, okay? And the balance is $305.10. So you're going to click continue. And in this case, we'll assume that this check cleared already, okay? So we're ticking it because we see it on our bank transaction, on the PDF or on the printed bank statement that we received from the bank. So we'll tick that, and we'll tick this deposit, and you'll notice that the difference is 0. If I untick, I have a difference of $327.70. So I know that I'm properly reconciled because I have a $0 difference. That's what you're going to want to look at. That's your sanity check. with your bank reconciliation. Reconcile now. And it's the same thing. It asks me for both. I'll say display. Okay. My ending balance, which is 30510, and the detailed version. And that's all. You may have noticed throughout this video that there were instances where I was able to delete transactions very easily. And a lot of people don't like QuickBooks for that reason, because you can easily delete or change things. Whereas there are other softwares that lock transactions, that post them in such a way that you cannot edit or remove or delete a transaction, or you may be able to do so, but it involves multiple steps and you need to be an administrator. Well, you're able to also lock transactions by doing a little setup. And I like doing the setup because once I've closed the month, I definitely don't want some other employee going into QuickBooks and changing stuff around. I like the flexibility that QuickBooks provides me with, that I can delete stuff if I really wanted to. But once I've closed my books, I don't want anyone touching those. Not even myself. I want to come up with a method so that if I accidentally change something, I'll get some kind of warning. So this is what I do. I go and hit edit. I go under preferences, go under accounting, go under company preferences, and there's a section here at the bottom that says closing date. Date through which books are closed. It says not set. I want to set this. So since I've done my bank reconciliation, I've validated everything is fine, I want to close April 30th. That means that if any transaction was done on April 30th or before, no one can change those. And I'm going to create a password, so only I will know this password. And I'll let you know what password I'm picking. It's called PASS in capital letters, PASS 123, PASS 123. So if it's properly set, if I go on any entry I made, for instance, like this bill, which is still open, it's dated April 1st. Now, let's pretend I try and change it. I try and change this number to 226. And I try and save. I hit yes. It tells me, whoa, I get this pop-up saying, this modification will affect transaction from close period. You must enter closing date password to make the changes. So you see, if I don't know that password, I won't be able to make that change. And I'm going to hit cancel because I don't want to change it. But if I did, I could do PASS 123, hit OK, and it did the change that I wanted it to do. That's the end of our video. Hopefully you found it useful, and if you did, please make sure to like and subscribe.